Well, I've seen a lot of news recently that stocks are splitting or they're announcing that they're going to split. For me, this really raises a question of whether or not it even matters at all. Now, I have done previous talks on stock splits. You can check out one of these videos if you follow this link here. Now, in theory, it really shouldn't matter. So I like this graphic, but we can clearly see that the answers are wrong. It must be for some like third grade test. So let me just quickly correct the answers here. But in general, a stock split shouldn't be any different than splitting a dollar into change, right? So if you think about a 10 for one stock split, it's like getting 10 dimes for a dollar. If you think about a 4 for one stock split, it's like getting 4 quarters for a dollar. It should be completely irrelevant. The market cap should not change. The underlying fundamentals have or won't change. It just should be completely irrelevant. It shouldn't matter whatsoever. Now, there is some evidence that there are benefits to splitting stocks. So it turns out that oftentimes when you split your stocks, the price increases in terms of the market cap increases because demand has increased, because now there are people who could not afford to buy a full share at the old higher price can at the split price. So demand goes up and your stock price goes up. There's also arguments that the price discovery improves because you have more players now that are able to be in that market, more people in the market, better price discovery. And also companies typically do this on the on the heels of good news, so it's usually a positive signal. It's something that shareholders can look to for sentiment from the company about how things are going, because companies don't want to split and then have their shares, have the market cap go way down. Now, there is some thought that when you don't split, when you don't allow these kind of fringe players to get involved, that the shareholder makeup is better. It's a higher quality group of shareholders. They're more focused on the company itself, less focused on the price per se, at least in the short term. They're not transient, so they're not going in and out of the stock. They're not just indexers. They actually have some kind of view on the company. They're long-term focused, and they'll actually give the company some strategic leeway. So they'll allow them to invest in long-term projects that will benefit the long-term success of the company at the expense of kind of short-term gaming in order to keep that short-term share price up. Now, there was an article, and you can check it out here if you follow this link, but it was basically saying that AutoZone, Bookings, Cable One, NVR, Seaboard, that they understood this and they don't split their stock. So their stock is currently very high. They have a very high level of quality shareholders, and that Apple and Tesla had kind of forgotten this lesson by splitting. They were kind of allowing people who weren't really focused on the long-term success of the company to get in and be kind of transient investors. I don't know if I buy this, but this is kind of the sentiment of this article. Now, of course, as I mentioned in that previous video, fractional trading is a real thing. So increasingly, you can buy pretty much any fraction of any share for any company that you want. There are, especially on the electronic trading, you can do this for free. There's no major, penalty for trading fractional shares. So companies then get all of those benefits we previously outlined, and it kind of overrides all of that, quality shareholder makeup argument that we saw in the past. So I think increasingly what we're going to see is stock splits are completely irrelevant. You might as well just say, every company's stock trades at $20 or whatever, because anybody's going to be able to get in there. It's going to be increasingly irrelevant. We might just find that it completely goes away altogether, or you just buy that. You go to your online trading, you go to fidelity.com or etrade.com or whatever it is, and you can just buy. They'll just say how many lots of $20 each do you want to buy or whatever. So I think it's increasingly going to be irrelevant. Time will tell, of course. Thanks so much for listening.